Every 3 months, stock traders panic. And why? Because it's earnings season. Earnings season arrives. Twitter explodes, CNBC screams, and retail traders freeze. We are looking at Apple here. But there is the uncomfortable truth. Earnings, you can see them at the bottom. Yeah, they don't move the markets. And you must be saying, what? They don't move the markets? Of course they don't. Supply and demand does. And I'm going to prove it, okay, by analyzing quite a few stocks. So today I'm going to prove it using the Magnificent Seven. I'm going to analyze the top 7 American stocks: Apple, Amazon, Google, Meta, Microsoft, Nvidia, and Tesla. And I promise that charts don't care about the news, okay? Let's go. So the first thing is that why traders fear earnings and why they shouldn't. One of the biggest fears for stock traders, even if you are trading Apple or Tesla or any of these stocks, okay, they fear. Why do they fear? Especially when they are trying to learn stocks, they fear earnings seasons. Every time earnings approach, the same questions appear. So when you look at these announcements here, negative, positive, negative, negative, positive, well, they just fear. Okay, so should I close my trade? They think, what if earnings are bad? What if the stock gaps against me? This fear doesn't come from price action, as we can see here in Tesla. We've been talking about Tesla and new weekly demand levels being created. Here, there, okay, like the one here that played out, the previous one, etc. So it all comes, the fear doesn't come from price action, it comes from fundamental analysis, financial news, and the media narratives. And that's exactly the problem. Most traders are taught the news releases. For example, let's analyze, well, the first one on the list, Apple's, okay? We take a look at the monthly. I recently did an analysis where we were expecting price to drop here the same way it had dropped to the previous demand levels, okay? So that's what we are expecting on Apple. But disregarding, ignoring what we are expecting on Apple, okay, we are going to see, well, on the last, since May 2023, 2 years ago, more than 2 years ago, every single earnings has been positive. And what happens? Okay, green is positive, red is negative earnings, okay, releases. So Apple, the latest, look at that, okay, so it dropped heavily, like 33% here, there about 20% to 20%, and well, earnings were positive. Why did it drop 30% here? Why, if the news were positive, did Apple drop as we expected to this monthly demand level over there? All these imbalances have been covered in Set and Forget Online Trading Academy. Some of them have been shared on my YouTube channel. They disregarded these news earnings, these earnings and revenue and the fundamental analysis. Okay, so because if you use common sense, if Apple is one of the top 7 stocks in the world and the earnings are being positive every single quarter, why did Apple drop 34%? It doesn't make sense. I mean, if you explain this to a child, he will say, what? It doesn't make sense. If everything is positive, then it should be rallying. Why are there positive news here and then it drops? Because Apple was overextended and we were waiting for the pullback. Okay, so this is one of the reasons. Okay, but we're going to see many more. Okay, so most stock traders will start thinking, like I said before, I mean, should I close my trade? Like now on Apple, well, probably will continue to rally, but this is what we are expecting. But right now, after that huge rally, okay? So if the earnings are negative, like here, negative, and then it rallies. Positive, it rallies. Positive, it drops. Positive, it rallies. Here, positive, it drops. Positive, it rallies from where? From demand, okay? Positive news at demand, this is what usually happens. And even negative news off demand, this is what usually happens, okay? So we have here positive news. Well, if we take a look at the smaller time frames, then we're going to see like there's a lot of volatility, okay? And that's exactly the problem. So this fear doesn't come from price action itself. It comes from fundamental analysis and what the media market narratives are saying out there, okay? Most traders are taught the news releases for stocks drive price, and that's not true. Big uppercase. That is not true. In reality, news is already priced in this movement in Apple stock, okay? And institutions and the smart money are already positioned long before earnings are released. You like it or not. Whenever you see a news release, they already know what's going to happen. And they don't even care because Apple is one of the top ones, Nvidia, Tesla, Microsoft, Meta. They're going to be heavily invested. Sometimes they will take profit, sometimes they will buy more shares, they will do, bullish or bearish option strategies, sell time over time, premium, and all kinds of strategies, okay? They will hedge, but news is already priced in price action and supply and demand way before these earnings releases that we can see here in Apple are even mentioned, okay, or release. Retail traders react, institutions prepare. There's a big difference. So this is what I call the fundamental analysis trap. This is Apple. If we take a look at the smaller time frames here, okay, we can see like positive news here. It helped the all-time highs to be broken. Positive news off demand, it rallied. Positive news here off demand, it rallied. I'm not even analyzing the price factor, the estimated, reported, the revenue, the earnings. It doesn't really matter. All this is useless. Okay? Useless. And if you been following me for some time, you will see that I'm sharing trades way before they happen. I disregard news because they are not needed. Okay? Fundamental analysis looks backward. Okay, earnings reports describe what already happened. This is what we are expecting from the demand level here on the monthly. There, okay, positive news there. So we are expecting this. So the thing is that earnings reports do not describe what is happening. It's describing what has already happened because the big boys, the institutions, are already thinking of buying there. Okay, so they know that what's going to happen because they are actually moving price. Okay, institutions don't wait for press releases; they create positions based, okay, on these what they know about the stock, and they create positions months in advance. They were thinking of buying there, and now probably they will start taking profit, and Apple will drop the same way it drops down there. It dropped down there, and it dropped many times in the past, and we will see that in some of the top 7 stocks now as I go over the earnings reports. Okay, so by the time earnings are released, like this one over here, for May 1st, 2025, we had a positive earnings release for Apple stock. So banks already know the expectations, funds are already positioned, and liquidity is already sitting at this demand level. And look at the reaction. You can see that by look at this large wick here. This large wick of about that happened in less than a month, or 20%. Why do wicks happen? Wick pull liquidity from pools of supply and demand, in this case from this demand level that is later helped by positive news, and then it helps boost the stock and help Apple stock to break all-time highs, as you can see here. So liquidity is already sitting at these imbalances of demand, in this case for Apple. The news releases do not create direction, okay? It simply triggers volatility, and that's the confusion, okay? Volatility shakes out intraday traders, stock traders, okay? The intraday traders that were thinking that Apple was going like this, they're, obviously scalping short on Apple stock. So this volatility shakes happen with positive news or negative news releases. They check intraday traders, scalpers, and emotionally over-leveraged traders. And then price continues doing exactly, okay, what supply and demand already dictated. And if you have been following me, as I said, you will know that we were talking about this level in the past and many other levels that I'm sharing with for Amazon, for Microsoft, for Meta, Tesla, UPS, so many others for Japanese yen, crosspairs for cryptos. And I completely ignore fundamental analysis in stock trading because it does not matter. Okay, that's the real truth. So we've got a demand level over there. We're expecting Apple to drop down there. Let's see what happens. It's going to happen. I don't know when, but it's going to happen. So the Magnificent Seven stocks case study. Okay, this is like real market proof. So I'm going to go across some earning cycles. Something very interesting is going to be happening and very consistent. Okay, so as I said here, all these were positive news, and then when you see positive news at demand, then it rallies. It rallies, and you can see that here, positive news, and it dropped. Why? Because as I said before, price was overextended. Smaller time frames were also saying something different. Okay, so if we go to Amazon, this one has demand in control on the weekly, playing out really well. I've shared this before, and also on my trading view ideas. Okay, so look at that, very strong demand level here, made of a large rally, and this rally was caused by positive news. It helped Amazon to break all-time highs at $244. So this volatility created this large bullish candlestick body, and then it took 1, 2, 3 weeks for Amazon to reach that demand level over there. There was no news over there. This is exactly where the news happened. Then it returned to where the demand level was created in this case, and then Amazon has been rallying ever since. Okay, so when even if there were negative earnings and demand was in control, we would have expected the same thing. It wasn't the case. There was no negative news, positive news that helped these earnings from the 30th of October 2025 help Amazon to break all-time highs. So even with a bullish gap in the smaller time frames, and then price drops, and it's been more than a month in control, trying to rally and break all-time highs again. Hopefully that will happen on Amazon stock. So scenario one, when negative earnings happen at demand, okay, bad earnings, bearish headlines everywhere in the world, analysts downgrade the stock, okay, jet price rallies. That's what usually happens. Exactly that. Why? Because the higher time frame demand level is in control, so it doesn't really matter what happens with news. This company is wanted by the investors and institutions, and they are going to do whatever they have to do. Earnings are irrelevant to them. They are relevant to intraday and stock traders, to scalpers, and to retail traders. They do not care about this. That maybe, obviously, they will be analyzing the stock from all angles, but it doesn't really matter. The decision will not be based on that. So institutions shouldn't care about the news because they create these impulses. Okay, they care about where liquidity was sitting. And if we go back in time here, we can see positive news, positive, everything positive on Amazon. So positive news here, it rallies a little bit. Positive news, it rallies strongly. Positive rallies. Okay, follow the crosshair. Positive, it rallies a little bit. Positive, it drops. Okay, here, positive news, it drops. Why? Well, I don't know. It just drops. Okay. Price action doesn't move in straight lines. Okay, positive news, it drops. Positive news, it rallies. Positive news, it drops, and here it rallies, and we end up with this demand level on the weekly time frame for Amazon stock. If we go to the monthly demand level and we draw this demand level we were talking about a few months ago, then we will understand something else. Okay, so we've got these two demand levels. So what happens if we go to the smaller time frames, the weekly? So these blue rectangles are the monthly demand level. So what happens? The demand level on the month is reached. Positive news, it rallies. Okay, the demand level on the monthly is reached again. Positive news, it rallies. Okay, so you can see it doesn't really matter. News and earnings releases, obviously in the smaller time frames, when we look at the 1 hour time frame, maybe as you go to the previous earnings, okay, it was positive and it dropped like 8%. Why? Okay, why? If you are, I mean, it doesn't make sense. Okay, Amazon breaking all-time highs, positive news, and then Amazon drops almost 10%. It doesn't make sense. Okay, so obviously in the smaller time frames, these earnings will create all kind of volatility. Okay, that's the truth about news releases and price action in the smaller time frames. Okay, because this is one of the most important lessons you will learn when you trade stocks. Okay, news releases do not change supply and demand in the bigger time frames. They only inject volatility, like here. They create liquidity, they give institutions better fills, and that's it. Price moves from imbalance to imbalance, and we can see here on the monthly time frame. Here, and here, this blue rectangle corresponds to the weekly demand level. Okay? So, as you can see, the earnings releases are irrelevant for Amazon too, and for all the stocks that we are going to analyze, okay? Because when demand is in control on a large time frame like this monthly demand level Amazon stock, okay, news didn't cause the move, okay? It helped price to react to it, and in the beginning here we have like this positive news that helped Amazon to create the imbalance, and then after strong rally we have to wait for the pullback. It drops down there, and when it drops down there, after a month, the positive news happens again, and then it rallies. Okay, and it's always exactly same thing. Okay, this is debunking the news and fundamental analysis. But since most traders are obsessed with intraday and short term, they want to make money every single day. They want to double their accounts overnight. So that's why they ignore the fact, and they do not see this coming. They don't want to accept this truth about news releases and price action. I have had even 2 emails insulting me in the last couple of years of people telling me that I don't know anything about trading, that why I'm ignoring this, blah blah blah. I mean, people that get it personal, that's insane. Okay, I'm just giving my view, and I am proving, okay, through my video analysis over more than 10 years, okay, that this is the way I am talking about. Okay, this is the way it is. So this is proof. I'm sharing this analysis with you on YouTube, on all social media, on TradingView, my TradingView account here with the price stock ideas. I'm doing a lot. So, but short-term traders fear earnings. Now, here's why confusion happens. Most traders are doing intraday short-term trading for stocks, scalping, okay, using short-term strategies for stocks, also for Forex and cryptos, okay? So they trade short-term, they trade intraday, they use tight stops, they rely on indicators, and when earnings hit, okay, the spreads obviously widen, the volatility explodes, and they were thinking to go short, obviously they lose, the stops get wiped off, emotions go wild. This creates the illusion that earnings are dangerous, but earnings are not dangerous at all. Okay? No, it's not. Short-term trading during earnings is dangerous, of course, if you are trading the 5-minute chart. Okay? Trading the 5-minute chart. Where is the news release? Somewhere. Maybe it's not even the show there. If you are trading the 5-minute chart, obviously the volatility, you can see the gaps. That will be very difficult. Okay, you might be blown out of your position, depending if you are going long or short on your trading strategy here when the earnings happen. Then you will have a loss or not. Okay, you were bullish, obviously you will win. But the thing is, when you are trading the smaller time frame, gaps can happen, huge gaps, and you can lose much more money than you invested. originally, okay? And that's a huge difference. Like I said, short-term trading during earnings is dangerous. So obviously, if you are doing very short-term, do not trade prior to news, during or after news. Let the storm pass. But if you are trading in the bigger time frames, like the weekly, daily, and monthlies, okay, you do not care about anything, okay? If you are trading the monthly demand levels on Amazon for long-term positions, you don't care about news. They do not make a change. Swing trading, position trading on stocks based on weekly demand levels, like the one we're showing here on Amazon and Apple, are completely unaffected by the earnings noise. And yes, I said noise. Okay, so let's take a look at another one. Next one, Google. Okay, on Google, what are we expecting on Google? Well, Google should drop down there. Okay, that's the long-term type of analysis for Google stock in the following 2026. Okay, this demand level played out. It was reached again. It played out very, very well. But this rally was about how much? 20%, 40%. Then it dropped. Demand into control and played out. Then it dropped more than 40%. It dropped and then it played out and created a demand level that is way stronger than this one. Way stronger. So what should we expect? We should expect this. Okay, that's what we should expect. And institutions, when they trade, they are early. The retails are late. Okay, institutions don't wait for earnings or react to headlines or shade scandals. They accumulate a demand and they distribute demand here and they distribute a supply, and we don't have any supply here. Okay, when earnings are released, retail traders rush in after the move has already started. Okay, and they do breakout strategies and all that kind of stuff. Okay, and that's why the gaps in the smaller time frames, like this, with the demand level in the daily in control, okay, these gaps happen, fake breakouts appear, and emotional trades fail. So by the time the news is public, the small money is already positioned. So this is not what we do and set and forget. So when we look at the weekly time frame, okay, we can see that was the monthly demand level. Okay, positive news, price drops. See, price drops. Positive news after the demand level gets control, it rallies. Price drops again to the monthly demand level here. There. Okay, we have positive news the 24th of April 2025, the beginning of the year, and then that ignites the rally, followed by another positive news that happened in July, and then in October, in this candle here, it again boosted, and helped Google to continue breaking all-time highs. And now it is super overstanding, and we are expecting this. That could happen in 2026. So as you can see, all this positive news happened, and then the stock even dropped 40%. It doesn't really matter, but in the smaller time frame, of course, that will be a problem. So the set and forget trading perspective for stocks and all any asset, we ignored earnings releases. Okay, we ignore them. Economic calendars, analyst opinions. Sometimes they are completely opposite one to each other. Okay, media noise. We should focus on supply and demand imbalances, like these demand levels on the monthly. Higher time frame context, clean price action, like this move over there. And patience. Trading is not about reacting, it's about waiting. And yes, waiting is boring, but boredom is far cheaper than fear. So let's take a look at another one of the top 7, Meta. And this one is a few videos talking about this. I recorded Meta video analysis when it was there, and the reasons why we were expecting this, and when Meta will reach the demand level, and that it is doing exactly the same thing, what we were expecting. Okay, so what do we have on Meta? Okay, so Meta, negative news, but what happens? If we take a look at the weekly time frame over there. Sorry. That weekly time frame, that's the supply level over there. Okay, so what happens? Negative news on Meta. The first time, well, since February 2023, more than 2 years ago, was the last negative news for Meta. Okay? And this one happened where? Happened the 9th of October 2025, and a supply level on the weekly was in control. And as I explained in quite a lot of detail for Meta stock in a video that I recorded when price was around there, we were expecting this, and then this, when I recorded the second video, Mark Zuckerberg were inside. There was some insider trading about Mark Zuckerberg selling $12 million on shares in the beginning of August of 2025. He knew this, he provoked this, or helped provoke this, and then obviously he must have bought some more there, okay, after backing hundreds of millions at the top in profit. So this is Meta, and we go back in time. Positive news here, it breaks all-time highs. Positive news, it rallies strongly. Positive news, it rallies. Positive news, well, it does nothing. Positive news, rallies. Positive news, it drops. So it doesn't really matter, but when you zoom out and you add these imbalances on the weekly and the bigger time frame, then they will start making sense. Okay, negative news off supply, that's the perfect scenario. Okay, negative news earnings release, we are expecting price to drop, and we also have supply in control after a very strong rally. So it happened there at the top. We were expecting this, so that's the perfect storm happening on Meta stock. Okay, why? Because we were expecting this. Okay, supply in control, negative news during October 2025, and then price. That was the news earnings was the catalyzer for Meta stock to drop down there. Okay, so that's the Meta. Oops. So now let's take a look at three more. Okay, Microsoft stock. And we're going to take a look at the bigger time frames. Okay, and this is exactly. Does it ring a bell? If we go to, well, let's do this. Let's change the template. We're gonna here Netflix. We're expecting this, but Microsoft here and Meta. Okay, Microsoft. So look at these here. Look at the reaction, and this is what we are expecting on Meta, on Microsoft stock too. After a very strong rally, we're expecting this. It's happening. Maybe we'll reverse from there. Okay, no problem. But that's where we're expecting this. Okay, here it could have reversed from here. Yes, it didn't, but it dropped to the demand level. We're expecting exactly the same on Microsoft. And if we take a look at Netflix, we already have Netflix in a very similar level. And on the left side, we're gonna add Meta platforms. Does this level look like this one? Yes, it does, my friend. We're expecting this. Okay, so if we analyze Netflix, this is not one of the top. Positive news, and now price is dropping. To where? To the demand level on the monthly at around $100 per share. Okay, earnings releasing soon at the 20th of January. The demand is in control. What is going to happen? This is going to happen. Okay, so maybe Netflix will stay there for a few weeks until the end of January 2026, and then with that news catalyzer, it will rally again. Okay, here on the Microsoft, the opposite happened, and now the demand level is in control. We have to wait for the 4th of February until the next earnings happens, and the negative earnings took almost 3 years to happen. Okay, and next one probably will be positive with demand in control, and it will start breaking all-time highs again. That's what we are expecting for the beginning of 2026 on Meta. Okay, and I hope that in this video you're going to remember about these earnings releases. Okay, you're going to remember one thing from this video, and that news is not a driver, it's an excuse. Supply and demand is the real engine behind every stock move. And if we take a look at Nvidia, number one stock right now in liquidity, market capitalization, we've got the demand level here in control, rallying, And what do we have here? Positive news, price is rallying. Okay, positive news, price rallied. Positive news, it rallied. Positive news, it rallied a little bit. Positive news, trying to break all-time highs. Positive news, well, the candle on the monthly is not that great. But if we take a look at the weekly time frame, okay, then here we've got a demand level over there on the weekly. Positive news happened after the demand level was created, but this earnings release for Nvidia stock, the 22nd of May 2024, helped, okay, the creation, okay, to create that, helped create a demand level. Then it price price, Nvidia price dropped down there, it played out, and then it dropped again. Positive news happened here, and then it dropped. Positive news happened when the demand level was already in control, and then it continued to rally. Positive news here is reacting to the demand level in the monthly, and positive news here helped the stock drop, and now it's rallying again. So this is Nvidia, okay? And the same thing. And if we go to Tesla, on Tesla, I have done quite a few analysis on this one, okay? My YouTube channel with this demand level on the monthly, also demand levels on the weekly, like this one, and that played out. Also this one down there, that played out really well. So on Tesla, as you can see, this is the only stock out of the top 7 that has like a mixed earnings reports, okay? Negative, positive, negative, negative, positive, negative, negative, negative. I mean, on the other ones, maybe we had one negative earnings release in 2-3 years. And Tesla, 4, 5, 6, 7. Insane, isn't it? I just realized. So what happens here? When we take a look at the monthly time frame, we take a look at this monthly demand level over there, what happens? Price drops, okay? In March 2025, we were talking about this demand level on Set and Forget and probably on YouTube channel too. Negative news happened. What happened? Negative news, price rallies, my friend. So who cares about earnings releases, okay? Positive news happens after the demand level is in control and after the negative news, and then it helps price rally again, okay? Then negative news there. Let's take a look at the weekly. Negative news. Nothing really happens. Here we've got this bearish impulse as resistance, preventing price to rally. So that is acting as an obstacle, and it helped Tesla stock to drop, and it almost reached this demand level here in the weekly. It fell short probably by about 7%, okay? And then it continued to rally. So it all has to do with supply and demand, as you can see. And the next earnings releases will be the 28th of January 2026. So there's a new demand level here in the weekly, created after breaking all-time highs on Tesla. So I hope that you remember this. I mean, one thing about the video is that, like I said before, news is not the driver, okay? It's an excuse, and Tesla is not an exception. So let me remove this, as you can see clearly in the monthly what we have, and here in the weekly being created. So only once you truly understand that stock earnings stop, you will stop being scary with earnings. Charts will become clear if you use the bigger time frames. You can see here on Tesla or Netflix or Amazon or Google, as we saw before. Patience becomes your edge, and supply and demand too, obviously. And that's when trading finally starts to make sense. So earnings don't move stocks, supply and demand does. That's fundamental analysis debunked and exposed. And if you like this video and the way I explain things, and if it makes sense, click on the like button and subscribe to my channel. You will be notified of more videos like this, and hopefully you will take advantage of some of these trade ideas and these tips about supply and demand and price action. Have a great day.